Hello everybody and welcome to today's video. Not investment advice of course, but today I bought more Tesla and I actually sold a stock that, is pretty safe stock. I sold some Microsoft and I sold an index fund, more shares out of an index fund, triple Q, the Nasdaq to buy some Tesla because the prices make no sense on Tesla. Not investment advice, but they make no sense. And so I just want to say, first of all, thank you. Thank you, thank you. I am thankful for great journalism. And it's really great journalism in the sense that it really helps us get the shares for the cheap. I cannot count the number of Tesla YouTubers, Tesla Twitter accounts that highlight the fact that really these are voluntary over-the-air updates. By voluntary, I mean proactive updates that Tesla's doing. They're software updates. But whenever Tesla does one of its proactive update, it gets listed as a recall, like as a traditional recall, because they are named recalls by NHTSA, right? Its official name is a recall, but it's an over-the-air software update recall. And you'd think they would write that in the title, but I've been following Tesla for many years now, and they never write this in the title. It's all about creating fear. So you always have to like dig deeper in the article to see later that it's of course an over-air update. And for the 19 recall of this year, I think something like 17 of them out of Tesla were over-air updates. But every single time you get that scary article who drops the stock price. It's very interesting actually to note that there's been more recalls at other automakers, quote unquote recalls, like Ford, for example, has way more than Tesla. But the media likes to be negative on Tesla because it earns them clicks. And when you get click, you get ads and they make money. So this is something that they've always done, especially on technology. There is a tendency for journalists to dislike technology. And that's great for us. I'm not being sarcastic. That's really great for us because we get to buy the stock for cheap. Let me show you some of the historic headlines. So the most highly praised newspaper in the journalism world is the New York Times with a 130 Pulitzer Prize. This is the biggest prize you can get for reporting, and the New York Times is used like by encyclopedias, and it's like one of the most established, one of the most respected newspaper in the world of journalism. And they've always gotten technology wrong. And this is not cherry picking. I could have taken any other newspaper. There's plenty of examples. I remember people saying in old newspaper, "Oh, why would you ever get a computer to look at stocks, right? Because you can look at stocks in the newspaper. So don't go get a computer." Back in the late 70s. But to give you an idea of the news, right? It's always negative headline on tech. It's very hard to find a positive headline on tech. They're always so negative on technology. And this is an example, right? 1903, we won't be able to fly in a million years, right? 1985, no one will ever buy a laptop. 1996, Apple is dead. It's so sad. 2006, Apple will never come out with a phone. 1939, television will never compete with a radio, right? 1904, cars will never go over 80 miles an hour. And you can go to my source right here. It's funny. It's always like they're always negative on technology. This is something that, as a tech investor, as a growth investor, we have to get used to and always have some dry powder or some pairs of stock that really we don't care as much, that act as like a buffer, like me and Microsoft and triple Q, that we can draw on to sell to then buy Tesla when we get almost 7% off, for really no reason besides the headlines. It's just the headlines. A Twitter headline, it's the recall headline, and another headline, and this time it's like journalism on fear, which I find not cool, and I'm not thankful for that. It's not cool. But the media, unfortunately, has always done that. It's like Beijing faces most severe COVID test as China reports first death. Well, it's not cool to generate clicks on deaths, but that's always been the case. Look, this is one of the most crazier headlines in history, and actually this was, I mean, tragic event, but this was obviously an overestimate, even for Johnstown flood, which was one of the most tragic events in American history. But this is still an overestimation, and they always do that. Why? Because journalism always thrives on the reporting of sad news and of people passing, and it's not cool, and I'm not thankful, and it's not sad, it's not happy, right? It's really sad that they do that, but that hurts Tesla, right? Because the whole idea is, oh, Beijing is going to lock down now, we're going to go back on lockdowns. It's preying on that, and that brings the stock down, way down. Add the Twitter drama, brings the stock way down, but that has nothing to do with Tesla. Like, we know that has nothing to do with Tesla. Tesla today is even cheaper, right? We still have 50% year-over-year growth. We know the deliveries are going to be great in Q4, right? The forward PE, this is one of the analysts, one of the more bearish analysts, I would say, on Tesla. It's kind of unbelievable I say that, but he's kind of more bearish. And he published today on Twitter the forward PE of Tesla being 24 times his estimates. So that means Tesla, on a forward PE basis, based on the 50% year-over-year growth, is cheaper than Apple and cheaper than Microsoft. Like, this is just insane. Obviously, I'm going to sell Microsoft to buy Tesla, not investment advice. But Tesla hasn't changed. The long-term thesis hasn't changed. Tesla is still likely going to be the leader in cars for the next 10 to 15 years, not investment advice. But look at this. It's a $4 trillion global market. $4 trillion a year worth of cars are sold. We sell $4 trillion of car each year. That's 76 million cars. They've only captured 2.6% of that. Adoption is an S-curve, like all tech. It's going to follow an S-curve adoption. This is my chart right here. I estimate we're right here. We're right at the 5% market penetration. Electric cars are going to really go exponential. And I've made a longer video about that and about why I believe electric cars are getting exponential. And it's not because of the environment. I mean, sure, the environment is a plus, but the electric cars are going exponential because it is a better tech. Because it costs $7 to charge versus $70 because they last 1,000,000 miles versus 150,000 miles. Because there's only 18 moving parts and almost no repairs versus hundreds of moving parts and lots of repairs, almost no maintenance versus very high maintenance. Software updates that keep your car up to date versus your car goes out of date based on the model year. You don't go to the gas station anymore. Lots of people hate going to the gas station. With a legacy auto, you have to go to the gas station. The car will eventually drive itself. We drive the car. The drive is eventually your taxi, able to drive itself back home after dropping you off at the airport. Legacy auto don't have that. The cars won the popular culture contest. Teslas are in video games. Teslas are in toys. That's the dream car of people under 40, on average, right? More than 50%. Oh, legacy auto don't have the cool factor anymore. That wasn't the case 10 years ago. The cool factor of legacy auto is gone. You buy online. People hate buying at a dealership. Legacy auto is still sold at dealership, and they just are having a impossible time of getting rid of their dealers. Teslas are computer on wheels. You can play video games in them. You can do YouTube entertainment, whatever you want in a Tesla. It's a work in progress for legacy auto. CEO of Volkswagen saying we're not going to be able to make it after spending $29 billion in software, right? You go to a clean charger on the side of the highway versus going to the gas station, getting your hands covered in gas and all of that. Highest safety ratings, best air filters, best driving experience, fastest driving performance, as opposed to 200K plus cars. That's what you have to buy if you want to have a legacy auto. They cost $200,000. Inexpensive insurance as opposed to a gas car insurance. I could go on. There's way more. I'm going to make a series on Tesla and my conviction of Tesla. Tesla is a low uncertainty investment, not investment advice, but it's a low uncertainty investment because the thesis is well understood. We're all drivers. We all can see the value. Like, if I were to go to Snowflake if we don't work in the data warehousing space. It's tougher to see Snowflake as an opportunity. Tesla is easy to see as an opportunity. That's why so many shareholders see this opportunity. That's why you have so many people who are 100% Tesla in their portfolio, because there is a wisdom of the crowd on Tesla, just like there was a wisdom of the crowd on Apple. Again, Tesla is still the best risk-adjusted investment that I see right now. Elon will be done with Twitter soon enough. The Twitter situation is temporary, right? I mean, he's gonna be there for how long? For a few weeks, a few more weeks, 2 more weeks, 3 more weeks, maybe. Not a big deal in the grand scheme of things. Not a big deal for the quarter, right? Tesla essentially has no debt still. The competition, the debt structure of the competition is insane. The competition has so much debt. The debt is almost close to the enterprise value, right? They've engaged in revenue financing. They finance their vehicle with their financial divisions. Again, I've posted over videos about that. Tesla is cheaper than Microsoft and Apple on a forward P basis. Again, I think this makes no sense, and I'm thankful to the news allowing us to buy Tesla at such a low price. Tesla is still growing at 50%. And I'm not even talking about the catalysts. Just next year, just the catalyst of next year's new Gigafactories announced. Semi-trucks getting delivered to Pepsi in December. The Cybertruck beginning next year. The China 5% tax exemption in 2023 beginning January 1st. New tax credit in the US on January 1st, 2023. Battery credits, supercharger credits, January 2023, 4680 ramp, better batteries introduced everywhere, etc., etc., etc. There's much more. And recently, the chatter has been all about a buyback. Is a buyback coming? There's a lot of shareholders requesting a buyback, and I don't blame them. I don't blame them because Tesla is so cheap. Tesla on a forward EP basis right now is cheaper than Apple and cheaper than Microsoft, which is crazy. So again, this was a quick video, but I am thankful for the news about the recall again, which is giving us an inexpensive price on Tesla, and I was very happy to swap investments to claim some losses on Microsoft and on QQQ to buy some Tesla. Not investment advice. All of this was entertainment and entertainment only. Thank you for your support. Don't forget to like and subscribe. And you can follow me on Twitter at BeatTheDenominator. Thank you so much for watching and have a great day.